Oh man, a huge move for Bitcoin, up 4% here on the day, up almost 8% over the last 24 hours. Can Bitcoin go ahead and get that 29,000 level mark? In this video, I'm going to show you the various different price targets, the different patterns we're looking at here on the chart. And guys, if you've been following my videos over the last few days, you have been making bank. We have called this symmetrical triangle out perfectly, took the breakdown to the downside, the bottom of the triangle being the price target. That met exactly. I then shared my video yesterday, what could happen next. Here's a clip. You can see Bitcoin trying its best to hold some support at the bottom of the wedge. Now, what I'll be looking for is, can we get a rally back to the apex? Can we get a rally back into that 27.7 range, up towards 28, and then maybe try to reverse this pattern here? Can we do something like this and get ourselves back out? Because remember, you're going to have a lot of eager shorting people who are trying to short this pattern to the downside. If you can liquidate them, you can use it as a bit of a short squeeze to work your way back up. And as you can see, it played out exactly as we said, liquidating the shorts and making a move to the upside above the apex of the symmetrical triangle. If you want to learn TA like this, ijaz.uk/TA. Who else is giving away over a decade's worth of technical analysis experience from TradFi? I worked in TradFi as a trader. Who's giving that away for free? Link in the description. Go and learn that stuff. So what are we looking at next? That was what we've seen happen now. That's great. But where are we heading to? There's a few different structures we have to look at. And the first one I want to share with you is this. We fell out from the diamond pattern, right? So when we fell out from a diamond pattern, what you end up then creating is a channel, which I'm going to show you shortly. So congratulations if you saw this diamond pattern, took the breakout to the downside, but now the full price target is invalidated. Because the symmetrical triangle variation played out, this played out here, now the full diamond price target, which we were saying, which would get us back down to 25,600, for now is invalidated. So we can ignore that. But what you do want to look at is this. We have now turned that diamond pattern into a channel, and now we need to gravitate ourselves to the top of this channel. And the reason for that is we need to post a higher high. We will lose steam and create a rounded top, or you can call this an inverse Adam and Eve pattern, doesn't matter what you want to call it, but if we create a lower high here and we're unable to go and breach 29k, we're going to see weakness in the price, and that's going to be a problem because then we could be breaking back down to the downside, okay? So I'll still look out for some troubles here if we fail to post this higher high, but this is looking good so far here. We can work our way to 29,000, then we've got a higher high, and then then it doesn't matter. Once you touch 29, then you can come down again. That's absolutely fine, but as long as we start keeping our upward channel. The other way to look at this structure, which gives you the same outcome, is looking at this symmetrical triangle and looking at the breakout we've just had. When you have a breakout, you always look to the left. Remember, look to the left, look to the left. You see that we've met the first pivot point, fantastic. Second pivot point brings you to 28,600. We're pretty much there. We just wicked there a little while ago, a couple of hourly candlesticks ago. And then you look to the left one more time, and that's where you can see that 28,900 level, which we have to beat. We have to get above that level where my cursor is right now to post that higher high. Really important, guys. Otherwise, we could be losing steam here, and then you're going to be shocked how we could pull back even down to that 26,000 level. We've seen crazy volatility here in the Bitcoin price action. So it's important that we're able to capitalize on that and use that to get us to 29,000 and then work our way towards 30. Now, zooming out a little bit here onto the 4-hourly chart, our ascending broadening wedge, remarkably, is still holding intact. We have not adjusted lines. We've not changed it. This is a pattern we were forming a long time ago, and we've continued to stay within this. And what did I say? I said, guys, as long as we can hold this support here and we can retest, we're going to get a nice move to the upside. And remember, the price target from this, and I know it's just a technical price target, but it brings you to that 33,000 level here on Bitcoin. And we're holding very nicely. This is very good. Where this level here on this ascending broadening wedge was acting as resistance, now you're seeing it start to act as support, which is fantastic here for the price action. So I am looking for that to continue to play out. But again, none of that will play out if we're unable in the small game here, like I just showed you on the hourly chart, to get above that 29,000 level mark. That's going to be important. Then we've created a higher high, and we can carry on towards our price target here on Bitcoin. Now, I need to show you this chart, guys, because this is the quarterly chart on Bitcoin. In other words, every candle is showing us 3 months of trading action. And what I want to show you here is this. This is the latest quarterly candle, which closes at the end of March in 2 days and 13 hours time. We have delivered 71% return on Bitcoin. What other 14, 15, 16-year-old asset class is delivering on this kind of numbers here? I mean, outside of altcoins, which are obviously a lot more riskier, Bitcoin has just delivered you 71% in 3 months. But here's the thing. This is the best quarter we're setting up for in the last 2 years. Incredible quarter here. But this is why it's important. And I get frustrated when there's so many people, influencers, people on crypto Twitter who tell you to sit out of this market, right? That is irresponsible. My way of doing this, I need to be in the market. I cannot afford, whether it's the S&P, whether I'm trading traditional finance, whether I'm trading crypto, investing in crypto, I need to be in this market. I can't sit out. If you miss some of the best handful of days, or in this case, handful of months, you're missing out on all the gains of crypto. What's the point of dealing with all these down periods? I mean, look at this quarter here, down 56%. If you're not going to be in these quarters where you're making 70%, you're just going to keep getting wrecked. So it's important you're spending time in the market, not trying to time the market. One of the biggest mistakes I see new investors and traders make. Now let's bring out the EMA ribbon. As you can see here on the 4-hourly candles now, we've now reclaimed our EMA ribbon, which is fantastic. Again, need to go past that 29. Nothing is good until we get past where my cursor is right now. Then things look exciting. Then we're into price discovery here, and we can start moving our way to the upside. Let's notch that up now to the daily chart, and you'll see how powerful this move is on Bitcoin. This was a consolidation period, right? From the 18th of March to where we're at now, we just consolidated sideways, which is fine when you've had such an extensive move. It would have even have been fine to come into the EMA ribbon, but it's not had to. It's just moved sideways, which is showing how much strength there is in Bitcoin. You've had a little bit of an RSI reset on Bitcoin, but you'd want more ideally. So that's why I was calling for even a bigger pull down to 25,500 is absolutely fine and healthy here on the Bitcoin price. But the fact that it's able to do that now is just showing that Bitcoin is raring to go. People want to be in Bitcoin. They're buying Bitcoin right now, and you're seeing that materialize here in the price action. Let's also take a look at the daily Bollinger Band, because we need to take a look at the structure here. And what you can see is we tried to get some support here from the middle line, but again, it didn't even need to go into the middle line. Normally you see the middle line act as a bit of support and resistance. It came consolidated a little bit, and now it's going to work its way up. But look where the top band is. The top band brings you to that 31,000 region. So again, do not be surprised to see a nice big move if we can clear through 29,000 to push through 30 and head higher. Of course, it wouldn't be one of my videos if I didn't show you the other side of the equation as well. And the other side of the equation is look at the weekly chart. On the weekly chart, we are running into our resistance on the Bollinger Band. Again, if this Bollinger Band thing doesn't make sense to you, ijaz.uk/TA, you're going to learn all this in minutes, and you can keep it there for reference whenever you spot these patterns yourself. So again, this could act as a little bit of resistance. You're seeing that the last couple of weeks, last week and so far this week, have been a little bit of hotly contested weeks, right? Particularly last week. It's a doji candle, which again, we go through in the course. And that normally signals that you could struggle a little bit, that you're running a little bit of steam. So we need this week here to continue to be strong, to push through this Bollinger Band instead of getting rejected. What I don't want to see is a weak Bollinger Band which struggles, like I said, past that 29,000. If we don't reclaim that 29,000, we could get some softening in price action, bringing us back down towards the middle here in your Bollinger Bands. That's not what we want on this weekly time frame. And you'll see a similar story show on the weekly EMA ribbon, right? Again, if we're not able to go post that higher high, you could be coming back down to test the EMA ribbon, which brings you down to that 25,500. So just because we're enjoying this move right now, I want to see 29,000 reclaimed to then feel less likely that we're going to come down to 26 or 25 or in between there for a retest, okay? So that's what I'm looking for. If we can clear that 29,000 mark, work our way upwards, then it's much less likely that we need to come collect support at 26 or 25.5k in that region. And last but not least, let's look at the VPVR, because this shows you where this cluster of resistance is, where we're struggling. This region here, between 24,400 here, all the way up to 29, just shy of 29, is very thinly traded. Look how thinly traded it is, and therefore look how easy we pumped that. We took it in a week, right? We took from here, we took all of this in a week because all this was very hotly contested, these two huge candles. This one was decently contested, but once we cleared with great strength through here, we just went all the way and gapped all the way up just shy of 29,000. But now you've got a decent volume candle again. So this is going to act like resistance. You can see the cluster of resistance here. And once we clear through those levels, if we can work our way past 31, 32, then I could see another gap up, because look again, look how quickly the price fell. The price fell so powerfully here that do not be surprised to see us start working our way up towards this level here, 37, quite quickly, right? Because the volume becomes much thinly traded. A few other important things to note here. You do have the pre-market opening up quite powerfully today. It'll be interesting to see how this equates when the market's actually open. But Nasdaq trying to push on to almost 1% here in the pre-market. Similar for S&P and the Dow Jones, 0.75%. And the reason for this is we are seeing risk rotating a little bit on. So what I want to show you here is, let's take a look at the Dixie, and you are seeing that the Dixie is starting to open up a little bit. It was having a red day. It's trying to fight its way back. US 10-year yields are falling quite significantly yesterday, but again today they're recovering a little bit, so we need to watch for this. If this bounces strongly today, we could have a bit of a challenging day for the rest of the day, but we do need to monitor this. Remember, we are inversely correlated to these things. You want the yield to fall on the US 10-year and you want the dollar index to fall. When these two are falling, it's better for crypto. Important to note that you also have the Federal Reserve's Vice Chair, Barr, who is also giving testimony at the Senate Banking, Housing and Urban Affairs Committee. Okay, so what he's doing is he's giving a hearing on all the things that happened with Silicon Valley Bank. Okay, so this can be interesting because if anything comes out that worries the markets about, oh, this could happen again, and it's a more of a systemic issue versus an isolated issue, then markets could get a little bit of cold feet there as well. But again, that narrative is positive for crypto, and that's the beautiful thing about where we're at right now with crypto, is there's only one thing where things is going, and that is that this thing is only going one way. The printing machine is turning back on, and we've spoken about this extensively. However the Fed want to do it, we are one, if not two meetings away from a pause, right? We're going to pause these rate hikes. We're going to eventually get to a point where we're cutting rates, and the balance sheet is increasing here on the Federal Reserve's total assets, and all that equates to more liquidity in the market, which is positive for Bitcoin. So the question you need to ask yourself is, when do you want to be in this market? Do you want to be in this market now? Do you want to wait? If so, what are you waiting for? And what is your game plan? But if you don't have a game plan, that's where you're going wrong. Hope you guys enjoyed this video. Don't forget to smash the likes. Don't forget to subscribe. As always, check out the links in the description. And I'll see you in the next one.